Australia's relations with China and France take steps in the right direction over the weekend after 2 years of tension. Wall Street tumbles as US inflation hits a 40-year record and the local ASX gets a shake-up. It's Monday the 13th of June 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson and good morning, Sean Aylmer.
Good morning, Michael. Now, are you enjoying the long weekend? We're in the middle of it still. Now, not if you're in Western Australia or Queensland, but the rest of the country's having a good time. And if you're in one of the cities where the weather's good, it's been quite spectacular this weekend.
Yeah, it certainly is. And so it's an ever so slightly shorter podcast today.
That's right.
But heaps of great information. And we've also got two interviews to listen to, of course. One with Jane Shoemake, the client portfolio manager of Janus Henderson. That's all about dividends. And of course, our regular Monday episode of Fear and Greed, the week ahead, with our resident economist, Stephen Koukoulas.
Yes, a big week last week, of course, with the Reserve Bank lifting interest rates. And this week it's all about the employment market. We talked to Jane about dividends. She's an expert in finding the best dividends for investors, and she's UK-based. Great chat, that one.
Yeah, plenty of good stuff coming up. Bit more on that one later on. But Sean, Australia's relationship with China has been, I suppose you'd say, decidedly dodgy for a few years now.
Yes,
but
that's a technical term.
Yes, it is. It is. There's been a big development over the weekend. Well, it seems that way, with Defence Minister Richard Marles holding talks with China's defence chief at a summit in Singapore.
Yes, there's been no high-level discussions between the two countries for a couple of years now, not since Australia called for an investigation into the origins of COVID, which triggered a bunch of sanctions and tariffs on Aussie products. Mr. Marles met the Chinese Defence Minister, General Wei Fang, at a summit on Saturday and said while it was no more than a handshake, he was open to meeting again. And then yesterday, he had an hour-long face-to-face meeting with General Wei. Mr. Marles said it was a full and frank discussion and a critical first step. He said he discussed an incursion by a Chinese aircraft on an Australian plane last month, Canberra's abiding interest in the Pacific, and his concern that the countries of the Pacific are not put in a position of increased militarisation. While it's a long way from saying relations are good, it is a step in the right direction and a step that we haven't seen for at least 2 years.
Yeah, absolutely. It certainly seems promising. And Sean, the freeze between Australia and France is also thawing. Prime Minister Anthony Albanese said over the weekend that Australia would pay around $830 million to settle a scrapped defence contract.
Yes, remember, former Prime Minister Scott Morrison dumped the French, preferring nuclear-powered subs built by the Americans and British. French officials over the weekend said the election of Mr Albanese and re-election of Emmanuel Macron as President of France provided an opportunity to work more closely. Now, the total cost of the decision to dump the $90 billion contract with the French naval group has come in at $3.4 billion. Sounds a lot, but it's better than the initial expectation of $5.5 billion. Still, Michael, $3.4 billion is yours and my money. It's taxpayer funds. It's a lot of money.
Yes, a lot of cash. All right. How about local markets? What's happening, Sean?
Well, they finished last week down 1.25% on Friday to 6,932 points. It was the lowest close since late January. And for the week, the index was down 4.2%. It was the worst weekly performance since 2020. Once again, the banks tumbled. Commonwealth Bank, Westpac and ANZ all finished down more than 1%, and Macquarie Group was off more than 3%. Diversified miner South32 has been a share market darling, up more than 60% over the past year. But on Friday, it fell nearly 4% and was the worst performer of the large caps. Wesfarmers was down more than 2%. Real estate investment trusts were the worst performers. Market leader Goodman Group fell 2.2%. Scentre Group fell more than 3%. Indexus was down 3.6%. The worst performer on the day was Lynas Rare Earths, off nearly 6%. The best was Cloud Accounting Group Xero, which rose 4%.
And what about global markets?
It was a very, very rough weekend for Wall Street after the release of higher than expected inflation figures for the world's biggest economy. The consumer price index in the US jumped 8.6% for the previous year, dashing hopes that the data would show signs of a slowdown in price rises. It was a new 40-year high for inflation, and investors expect 3 rate hikes over the next 4 months. That's one at every meeting of the US Federal Reserve. The broad-based S&P 500 closed down 3%, and the tech-heavy NASDAQ was off 3.5%. Now, the Fed meets this week, and as I mentioned is expected to lift interest rates. It wasn't just Wall Street that sold off over the weekend. European shares fell by nearly 3%, led by a big decline in the banks. Bitcoin fell to a one-month low of just over $27,000 a unit. Ether, Dogecoin and Avalanche, they were all lower. And Michael, finally, the Aussie dollar took a tumble and it's back down around 70.5 US cents.
All right, we'll be back in a moment with the rest of the day's business news. Sean, the big falls on the ASX in recent weeks has really changed the look of the top 20, hasn't it?
Yeah, it sure has. The top 20 stocks are the mega caps on the market, and there's been some big moves in recent weeks, and indeed even bigger changes if you take the last 6 months into account. Now, BHP dominates since consolidating its listing onto the ASX, and the big Australian is worth $234 billion. It towers over the former largest company, Commonwealth Bank, which is worth $160 billion. The only other company worth over $100 billion is CSL at $131 billion. Now, those three have been in those top three slots for a while, though not that long ago, CSL was number one, Commonwealth Bank number two, and BHP number three. That's changed it around now.
And beyond the top three, though, as well, there's been a rearranging of stocks.
Yes, so ANZ has gone from the sixth largest company a few months back to the ninth largest company. Macquarie Group, the new Woodside Energy, which is the merger of the old Woodside Petroleum and BHP's petroleum business, and Fortescue Metals, so Macquarie, Woodside and Fortescue are now all bigger than ANZ. The other company to slide down the rankings has been Wesfarmers, which is now the 10th largest company worth $50 billion. The two companies now in the top 20 that weren't there a few months ago are energy giant Santos, thanks to all those higher oil and gas prices, and diversified miner South32. Now, South32 has been the standout performer among the mega caps, thanks to rising commodity prices. On the flip side, James Hardie has fallen out of the top 20. Why does all this matter? Well, it matters because a lot of funds and passive investment funds that might only invest in mega stocks invest in these companies. Certainly, the demise of ANZ is the real standout there.
Sure is. Now, AGL Energy, Sean, has extended the time it needs to fix its Loy Yang coal power plant by 6 weeks.
Yeah, not good news given the spike in energy prices at the moment and the shortage of supply. Loy Yang is Victoria's largest power station, and one unit at the plant has been out of action since April 15 due to an electrical fault. It was supposed to come back online on August 1, but AGL said that would now be mid-September because it's struggling to find the equipment needed to repair the unit. Then on Friday last week, things got worse. AGL lost half its capacity at the Bayswater coal plant in New South Wales, Hunter Valley. That's 2 units, and because one other is already out of action, Bayswater currently is operating at just 25% capacity. Fortunately, in that case, that should be back online much sooner.
Sean, moving on to overseas news, there were some big rallies across the US over the weekend, including tens of thousands of people in Washington, D.C. to protest gun violence across the country.
Yes, there's been hundreds of mass shootings, literally, in the US over the past couple of decades. In the past 6 weeks, 10 people were killed in a Buffalo supermarket, and 19 school children and 2 teachers were killed in an elementary school in Texas. The protesters are calling to limit the use of military-style weapons that have been used in many of the shootings. Of course, President Joe Biden has done exactly the same thing, many other members of Congress. But it's unlikely because much of conservative America is against any such legislation, and they simply don't have the numbers to actually get the legislation through.
And we mentioned earlier China's Defence Minister, General Wei. He was strident in his criticism of the US at the Singapore summit, warning against the US and its allies meddling in the South China Sea.
That's right. General Wei said China's military will crash, is the word he used, crash any attempt by Taiwan to secure independence. And he accused his American counterpart, Lloyd Austin, of smearing accusations and threats. Now, on Saturday, Mr. Austin called out intimidation, economic coercion and harassment by maritime militias in the South China Sea. Clearly, he was talking about China. General Wei said the US shouldn't be meddling in regional affairs. Relations between those two superpowers are not great at the moment.
No, certainly not. All right, up next is the Fear and Greed Daily interview. We mentioned it earlier with Jane Shoemake from Janice Henderson coming to us out of London.
That's right. She runs what they call an income fund. And an income fund is all about income, which is heavy on dividends. And so we talk about some of the best dividend-paying stocks, the miners and the banks here in Australia. And we just talk about how incredible the payouts have been, particularly from BHP. But then we also check in on other options outside Australia if you're chasing dividends.
And of course, make sure you also have a listen to The Week Ahead with Stephen Koukoulas, really focusing on what happened last week and then looking ahead to the labour force figures out later this week. You'll find them both in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Monday, the 13th of June, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.